All right. Thank you so much for showing up for today's real estate investing with Victor Bell. I appreciate you guys showing up where I go over all things real estate investing, making money in real estate, and multifamily investing is what we tend to talk about quite a bit. But today's show, a little bit. If you guys haven't met me yet, I appreciate you guys for showing up. My name is Victor Bell. I'm the founder and the CEO of Bell Capital, where we actually invest in multifamily. We target multifamily assets for accredited investors with you guys who want to invest passively with us. Love to have you. But wanted to share that with you. So I've done $59 million worth of real estate. I've been doing real estate investing personally for, it seems like forever, but 20 plus years, since 1998. And I've done it all. I've done creative financing, regular financing. I've done subject to stuff, all the stuff you can think of with single family and multifamily and retail and land and small development. And I've always had partners. I've always done this stuff. And there's one thing I want to share with you guys that I wish someone would have told me. It is easier and better to go bigger than it is to go smaller. That's why I'm so passionate about helping people invest in multifamily, whether it's on your own or it's with me. The goal is for me to help you guys get invested with me. That's a mission of ours, is to help thousands of people get invested in multifamily with us. But I do this show so that way you can understand, I'm going to show you exactly how I do it, why I do it the way that I do it. So either you can do it with me and you feel comfortable about that, or you can go off and do it to yourself. Do it to yourself. Anyways, so today I wanted to go over a couple of reasons, the 3 reasons why. I always do that, 3, but it's 3. 3 reasons why you don't invest in multifamily. This is what I've found over and over again when I talk to people about investing. They want to do stuff, even if you're already a guy or a gal that's already in real estate investing, or you have a great business, you're making a lot of money. The number one thing is you don't have time. So I want to write this down on my whiteboard because I like for people to see stuff. All right. So the number one reason why you don't invest in multifamily properties, or most people don't invest in multifamilies, number one, boom, is finding the right, which is the key word here, the right deal. Number one thing is finding the right deal. Most people struggle with that because, unfortunately, especially if you've been in, like, you look at real estate as investing, a lot of people look at the wrong real estate. They look at fixer-uppers, they look at older properties, they look at single-family houses to get started. Like, if you're investing money, the number one rule for investing money is don't lose money. Right? So when you have money, you have a good business, you're making a lot of money, you don't have time, your goal is to find the right deal. That keeps most people from investing any money in real estate or even getting started because they don't even know where to get started. How do you even find the right deal? All right. Number two reason is getting the money. Getting the money. And I'm talking about the debt plus the down payment. So the fact of the matter is this: when you're getting great pieces of a great piece of real estate, a multifamily property, and I'm talking about like the stuff that we look at is 80 million, 100 million, 50 million, 40 million, like that type of asset. Where do you even get the money for that stuff? If you have a good business, you're busy running your business, you're busy managing your family, whether you have employees or not, you're focusing on marketing, sales, growth, expansion, keeping up with everything that you have to do. Like getting the money and the debt, it's like, where do you even find that? Most people have no idea. That keeps people from investing in multifamily real estate because they have no idea how to do it. For example, I was talking to a great buddy of mine yesterday, and he found a piece of real estate, and he was like, where do I even find the money for this thing? He needed financing. And I was telling them, like, hey, here's what you need to focus on right now. Like, you need a lender that focuses on what's called a DSCR, which is the debt service coverage ratio, because it was an income producing property. Like, and he was like, oh, what is that? And he's been doing real estate longer than I have. So just imagine if you're thinking about investing money and there's all these different things that you have to go through about even just getting the debt, understanding the new terms, what you need to say, what needs to be said the right way, changing the communication to whereas the people in the debt side or the financing side, which I've done that for 20 years, know that you know what you're talking about. Now, that's huge. And then the other thing is, like, how do you even get the down payment? Right? So, I met with some brokers yesterday who've done billions of dollars worth of deals, right? They do billions of dollars in multifamily real estate sales. And the biggest thing is usually it's never the debt. The debt part's more important than the equity and the down payment. But what keeps most people from investing in multifamily is they're like, dude, like, on an $80 million deal, we underwrite trying to put down 40% on that. So you're talking about $32 million. How do you come up with $32 million? Yes, even if you have it, you might not be able to get the debt. Because in the debt side, the real estate qualifies for the debt. Again, right deal. That brings about the financing. But if you don't have any experience, they're not going to give it to you. Period. That's just how it goes. So it doesn't matter whether you can get the down payment or not. But in this situation, where do you get the $32 million from on an $80 million deal? Those things keep people out of the best real estate, the best pieces of real estate, which is the multifamily, the quality assets that yield money for a really long time in returns, right? And last but not least, this is the biggest one, time. That's it. To manage the real estate. They don't have time to manage the real estate. Nobody does. Look, if you're, like I said, if you're running your own business, right? You have employees, you got marketing, sales, you got your product stuff, you got your administration, you have expanding, you're trying to continue to grow. And then when you're done, you have a family, you got a wife or a husband, you got your kids, or you got people that you care about, you want to support your church, your charities, you want to work out, take care of yourself, all these different things. You don't have time to manage real estate. You don't have time for what we like to call, I'll put it on a different page, the 3 T's. The 3 T's. The tenants, termites, toilets. You don't want to manage that because, again, it has to be done. Right? On a 100, 200 unit apartment building, you're going to need a professional management company. And if you have a professional management company, you still need to manage, we call it managing the manager, right? So you still need somebody on your team, or you, if you don't know how to do it and you don't have time to do it, how are you going to manage the management company? That's why people have such nightmares if they go, hey, we invested in a property, we invested in a group, they mismanaged the property. They didn't mismanage the property. They didn't have the correct team or the experience to manage the management company that was actually doing it. They were trying to let stuff run on autopilot while trying to go get the worst properties on the planet. So, look, if you are thinking about doing this, these are things that you really have to consider, right? So I'm not, most of the people I talk to are interested in investing with someone else. They're like, hey, look, I got money in an account, cash in an account, or retirement or 401k, and I'm interested in investing, right? So these are the reasons why most people don't do it on their own. They don't have time to find the right deal. They don't have time they don't even know where to get the money, right? Where do you get the financing and the down payment for this stuff? Or they don't have it, they really don't want to deal with it, and they don't have time to manage the real estate, right? Those are the 3 things that keep most great people out of investing in multifamily real estate. I mean, it's the main thing, right? Even if you have the time to find the deal, you may not have time to manage the managers or manage the property, or you might be able to get some of the financing because you found the right deal, but you can't even negotiate. I mean, this is a whole group of people in general. The same person that manages like what's considered, in multifamily real estate, let's say it's a C-class property, meaning it's like a lower income property for the tenants who live there. The management company that manages a C-class property with Section 8 or lower income assets are not the same management company that's going to manage an A-class apartment building in a great location with higher income tenants. That's a totally night and day, right? The better the asset, the better the team, the better the management company, the easier it is to get the financing, the down payment, and to get all of those things lined up, because this is a professional business. Just like probably your business, you are a professional at what you do. This is actually a business. Multifamily investing, or at least operations, is about being a professional. All the people on your team. So, like I tell people, the brokers we met with yesterday, these guys do billions of dollars worth of sales. The management company that we work with, they manage over $9 billion worth of real estate already in the market that we are actually scouting and hunting for deals in, looking to buy something in. The financing the financing that we're looking at is through like Fannie Mae, Freddie Mac, insurance companies, debt funds, the commercial mortgage professionals that search and source capital for the people the deals that we look at. They're professionals. We're not out there doing that. That is what they do. They find the best rates, and we look to negotiate the best terms for ourselves and our investors. So when you're thinking about investing in multifamily, you want to think like, dude, do you even have the time for this? Because if you don't have the time for this stuff, stay out of it. Just focus on growing and expanding your business, and like I talk about in my other training, raising your income. Focus on raising income, keeping more of what you earn, and then take that money and investing that money into something, because this itself is a business. And if you have your own business, you already know this. Whatever you do, even if you're already in real estate and you're buying and flipping and wholesaling and all that other stuff, these other deals, or smaller multifamily, like for yourself, this is a lot of work. So you're almost better off taking any additional money that you have put aside and just investing it with somebody like myself, who's building a team, who has the organization, who already has the resources. Just getting the brokers to find the right deal. This isn't deals that I'm finding. These deals are actually sourced by brokers. I told the brokers yesterday, dude, I don't want to source our own deals. We want professionals doing that. We are focused on getting the capital, building our investor pool, and talking to you guys and making sure you guys are comfortable with the deals that we're focused on. That's the real game here. So look, and this is something that we're doing over at Bell Capital. I just want to share that with you. It's like, look, if you love real estate, you're accredited, and you have money to invest, we would love to invite you to invest with us. You get the same deal that me and my partner, the partners that I've had in my past deals, get, because the goal here is for us to do all this stuff anyways. I've always done this. I've always found the right deals. We've always got the debt and the financing lined up and the down payment from our partners that come on board that are passive. And we've always managed the managers, or we put our own teams together to be able to make sure that we hit cash flow and return targets for all the multifamily deals that we've done my whole career. That's pretty much how we do it. Now I'm just able to do it for more people with Bell Capital, which is the fund that I put together. So that way I can go to you guys who are interested in either learning from me and doing it yourself, or learning how I do it, because I'm 100% transparent. And then that way you can say, yeah, I want to invest with this guy because he keeps it simple. I like what he says. That's the goal. And I want to do these shows, and today's show is pretty short. I had some questions, but I answered those questions prior to the show. And I'll answer them, and I'll answer one of those questions here. My buddy was talking about it yesterday. But it would really warrant a whole show. So he found the right deal, and he was focused on the financing. So this was the question, was like, hey, how do I get them to fund 100% of the deal? So look, I told him he wanted 100% funding on the deal. This was a question. How do we get funded on 100% on an income producing deal? That deal, I told him, I was like, if you go to, because he was like, everyone's saying no. I'm like, dude, there is no 100% financing on an income producing deal like that. Now, there is, but that's not how you say it if you're going to approach a lender. Like on his deal, these are smaller deals. The deals we look at, that wouldn't even fly. The conversation doesn't fly. And I was like, look, you need to approach a lender. For him, it was going to be a debt fund and or hard money or private lender. And I was telling him, I was like, you need to approach them with the numbers. This is what I talk about. You got to know this stuff, right? It's on another video, but I just want to answer this question. I was like, you have to go back in and go, look, let's say, for example, this property's worth, on this deal, his deal's only worth $1 million. It was only worth $1 million. He only needed about $300K, right? That included renovations because he's got some type of scenario going on with that specific deal. But the debt on that deal, the income of that property, just the way that it was set up, is going to be roughly about $9,000 a month, right? That's $108,000 a year. And on that specific deal, the $108,000 on a DSCR loan, DSCR, which is called the debt service coverage ratio. If you look at any of my other videos, I go over how to get financing for multifamily property. This is one of the key things that a finance person in multifamily will use to underwrite the deal, the DSCR. They want to make sure that for every dollar they lend you, the property is yielding roughly about $1.25. That's what we use. So it's like a 1.25 DSCR. Back in the day, we used to call it a DCR, which is a debt coverage ratio. But that's where we're at. And on this scenario, when I ran the numbers with him just quickly over the phone, I was letting him know, like, look, this NOI on this property could support $1 million loan. So you really only need 300K. That's like 30%, right? That's a safe loan, but you have to word it that way. Because he had no idea, because he's not in the multifamily space, he kept running and saying, I need 100% financing. I know this deal works. I'm like, it does, but your conversation has to change. This is one of the reasons why, like I said, the reason why most people don't invest in multifamily is because just getting the money, the debt part, he don't need a down payment, he has that, but the debt part is different. You can't approach these guys the same way. So that's what keeps people out of this. It kept me out of it for a long time in the beginning. I didn't even know what I was doing. Fortunately, I had partners who were in the finance space. So while I was learning financing and I didn't know, I thought I was learning real estate, but technically I was learning money. I was learning how to manage money. I was learning how to get financing and debt on real estate. I was learning how to negotiate terms and pricing. That allowed me to create higher returns for my investors over time. But I didn't know. My buddy didn't know either. But that was the question. How do I get 100% financing on multifamily? Easy answer, you don't. Can you? Look, if you're going to bring in a bunch of partners and they're going to bring in the equity and you're going to get in the debt, that's still 100% financing, yes. But your debt from like a lender or a bank or a hard money lender or Fannie Mae or Freddie Mac or whatever, they're not going to lend you 100%. And you shouldn't get 100% financing on any deal. This deal just happens to work because of the income. This is an income based, because it's an income producing property. So that was the answer to that question. And I know I went over that fast. Man, I'm working hard to try to break these things down simple. It's simple to me, right? And that's why I tell people, look, if you want to invest in multifamily, work with someone who knows what they're doing, right? That question wasn't on a normal deal that I would have done. He was just asking me how to do it, and I wanted to address it. But the real thing, what I wanted to share with you guys today, was the 3 reasons why most people don't get invested in multifamily, and this is it. I find it over and over again. 1, that they don't know how to find the right deal. Number 2, they don't know where to get the debt or the down payment. And number 3, they don't have time to manage it. Now, that's you. You're an accredited investor. You love real estate. You love the thought of getting cash flow, positive cash flow, the tax write-offs, the benefits, and not needing to manage the real estate. I would love to talk to you guys. You got to be accredited. And another thing, you got to have a great attitude. If you don't have a great attitude, like, that kills it for me, because again, all the deals that we look at, you're going to be a partner, right? And the worst thing ever is somebody who doesn't love real estate. If you have a bad attitude or you have something going on in your brain about real estate where you always have doubt, you're a bad partner. You would be a bad partner for anybody. And number 2, if you have a bad attitude. But if you have those things, if you love real estate, you got a great attitude, you love the idea of real estate, income, cash flow, tax write-offs, the benefits of future appreciation, man, let's talk. Go to bell-capital.com, or you can comment on this, or you can, send me a message. Myself, somebody on my team will reach out to you and follow back up. We'd love to talk to you about what we're doing and how we can possibly partner together. And I hope this helps you. So if you have these 3 down, if you can find the right deal, you know how to get the debt and the financing, or the debt and the down payment, you have time to manage the real estate yourself, or you can manage a management company. I suggest highly, man. I think multifamily real estate is the best real estate vehicle, the best asset class inside of real estate as an investment than any other one. Better than single family, better than office, better than retail, better than mobile home parks, better than vacant land, better than development, all that stuff, because it provides everything. It's real, it's simple, and it's understandable. I like that. And let's see what else. If you guys need anything, make sure to reach out to me. I'm trying to bring these shows to you. And I can tell you, man, I always struggle coming up with ideas, because I do my best to want to make sure that the things I share with you guys is very simple. You can share it. You like it. It makes sense. I know somebody said, Are You Money guys say a lot of stuff with no substance, but man, I wish somebody had showed me this. This would have saved me a lot of time when I was younger. I was doing this stuff, but I didn't know why I was doing it. And I didn't understand why people wanted to invest with me when I was younger either. So I hope that helps you. If you need anything, reach out, like this video, share this video, subscribe to the channel. We're trying to get our channel subscribers up, and I want to do more stuff with you. And when you subscribe, make sure you hit the notification button, so that way as we get new videos, I post something on our channel every day clips, videos. Sometimes I have ideas and I come to you guys, but I'm going to be doing a lot more over the next 24 months because we will be closing down a deal coming up here soon, and I want you to be a partner in it. All right. Have a great day today. Let's go.